And earnings from big tech have done little to ease concerns that even more pain is ahead. Our next guest says the FANG trade can still work. He's Tom Lee. He's Fundstrat's head of research, joins me here at Post 9. And we'll get to that in a second. It was a nice rebound, by the way, in the market, led in part by that area. But what do you make of that call? Top of our show today, Eric Johnson says we're going to get a violent rally. It's all going to happen in May. Can go 8 to 10% higher in the S&P. And it's going to be led probably by tech.
I mean, the market is oversold. And the timing makes sense because we've got a market nervous about FOMC and the meetings this week. And in a way, I know you guys have said it, the Band-Aid gets ripped off. So could a relief rally happen, 10%? Yeah, I think it's very possible. And I do think it would be led by tech.
So, OK, you make a bullish call on FANG at a time when some say the whole FANG acronym's dead. And then you had all these companies report earnings, and most of them reported slowing revenue growth. So how can I not be concerned about what the trajectory for the business looks like?
There's slowing because we pulled forward demand from COVID, but we still have Web 3.0, and all these companies are really going to be centered to that. And then we have a labor shortage globally, and the only way to cure shortages of labor is tech spend, and FANG are really the centerpiece of productivity. So I think that the top line will surprise people for the next few years, and again, above GDP.
So in terms of all the let's just say, I know you've been bullish. You admitted the other day that you were wrong. You were too early in that call. But if you do think that stocks are going up, in the rank of where I want to be putting my money right now, where does FANG rank relative to some of the other areas, be it defensives? Eric was even positive on cyclicals.
Yeah.
What do you think?
I put FANG at the top of the list because they've
number one. Top of the heap.
Nearly number one, yes, because they've derated. We, in our note today, folks highlighted that faster growing companies today trade at a discount to slow growing companies. It's a complete inversion of what's logical, and it only happened since November. And I think as that normalizes, that means the FANG could have the biggest moves.
Interesting. And how much do rates have to do with where they go from here, right? That also is why this is a big week. It's not just what the Fed does. In fact, we pretty much know what they're going to do. It's what they say that matters most, and where rates go. We were at 3% on the 10-year today.
That's right. When I look at rates, and I'm not a fixed income expert, 4 50 basis point hikes are already priced into the 10-year. And even in the 2-year and the 5-year. So unless there's a hawkish surprise fundamentally that drives rates higher, the bond market is sort of fairly priced. And then the stock market then has to figure out what the right multiple is. And look, at a 3% 10-year, that's a 30 PE for a bond. I don't think 16 PE for the S&P or 11 times for Facebook is demanding. So I think stock multiples can actually expand.
This, we've said that Milken's going on out in L.A., and Ken Griffin was speaking today, and I mentioned some of his notes from earlier today, talking about how Powell's in such a very, very difficult position, is what he suggested, that we're also at a time that he didn't use the word perilous, and I'm sifting through my notes to find the exact word he used, but nonetheless made the point that you got to go back to the financial crisis to find another period where it was so uncertain in terms of everything that's going on, not only here in the United States, but around the world. We're in perhaps the highest period of uncertainty, is what he said, since the great financial crisis. What do you make of that? Agree with it, disagree?
I might say March 2020 was more uncertain because people forget the Fed stepped in. But before March 2020, the market went into a huge panic. We had a 37% decline, and many people expected the end of the world. I think if there's any lesson 2022 is that the market is prone to panic and panic quickly. I think people are assuming the Fed is going to break the economy or the markets, but if inflation...
Well, history suggests that they are.
Yes, right? or inflation can cool, because financial... in a way, rates have moved in a way that have tightened financial conditions. So the markets are doing a lot of the work for the Fed right now. And that way, we don't have to break the economy or the markets. But again, I agree, it's very uncertain. But March 2020 was scarier, and yet people are more bearish today than they were in March.
Well, because in March of 20, you had to figure that the cavalry was going to come to the rescue, so to speak, in which it did. Here you have, you're pulling everything back. It goes back to the old
Sure.
argument of, I love people putting themselves into a pretzel trying to tell me all the reasons why it's okay to fight the Fed on the way down, but nobody wants to step in the way on the way up. It's just everything's great, going straight up.
And I think there's a bit of some revisionist history because in March 2020, nobody even believed the Fed could turn around a market in a free fall. And I think today the argument is, well, the Fed's not going to stop until the market breaks. I think there's the same kind of panic, but a different view of how the Fed would react. And again, I think if financial conditions tighten, the Fed doesn't have to be as aggressive. Then it's a dovish development. More importantly, I think if these tech stocks are trading 10, 11 times earnings, I think you're going to have an M&A boom. I mean, cost of capital's gone up, yet there's cash-rich tech companies. I just don't see how these aren't good investments for the next 12 months.
So is this the moment then? Because we've been discussing this for a couple of weeks now with you and others, do I want to finally now move away from defensive stocks, which have gotten expensive, and then go back to cyclicals, which are obviously more heavily impacted by fears of a slowing economy, or this tech trade, which has been terrible?
Well, I mean, I already have like 10 omelets worth of egg on my face, but I would say I can't see how anyone doesn't see great risk reward in owning FANG right now. And large cap tech, I think, is almost a no-brainer here.
Almost a no-brainer. Well, all right, well, we'll see, right? That's the best part, is you come back often. We can have these conversations often. We can see if it happened or not, and you either have more omelet on your suit or not.
Yeah, I like eggs.
It's Tom Lee of Fundstrat joining us right here at Post 9. Up next, we're breaking